All right, we're good morning, trade pros. Chris, good morning. Let's get started. Today we have a great day ahead of us. We have a big day ahead of us. A lot of market volatility already. Crude oil is just pit open, just right now at 60.72 on the bar chart. A lot of volatility in crude oil. We'll keep you posted on that. Today we got a big update for you. We got a lot to talk about. So let's start out by saying this. Last week, about $14.4 billion of it's a good start. Redo. Last week, about 14.4 billion US dollars flowed into global stock, mutual, and exchange traded funds during the week that ended Wednesday, which is the largest inflow since March 2018. So we're seeing institutional money pile back into the long side of the equity market. The big question remains, what will they do this week as we approach all-time highs? As we approach the all-time high marker, you should see more institutional money coming in. And if you do not, then that's a sign that we're not ready to break it yet, and we may retest some downside levels, which is, I think, what's going to happen this week. We're going to start with some early downside to equities, reverse the middle of the week, and keep going up. And we have huge updates this week. Jerome Powell is going to be speaking from the Federal Reserve, so the Fed announces their interest rate decision at 2 p.m. on Wednesday, followed by a press conference at 2:30. All right, we have crude oil inventories as well on Wednesday. In addition to that, we have on Thursday the Bank of England out of UK talking about their monetary policy report. We also have Bank of Japan. We have a really busy week in terms of central banking. And so the forecast for equity is a little muddy because that information is important. And I think a lot of traders wait for that information. On Friday, we also have the Quad Witch. And so Wednesday, Thursday, and Friday of this week, there's going to be a ton of volatility just based on those events. Monday, Tuesday, not as many big numbers posted to be released in terms of economic reports, but we could still get movement. All right, let's talk about the big elephant in the room and the huge news over the weekend. A drone strike in Saudi Arabia hit the Aramco facility in Saudi Arabia, one of the biggest, in fact, the biggest, responsible for putting out about 5% of the world's global oil output. All right, the equivalent to about 5.7 million barrels a day of supply that just went dry overnight. And that is half of all of Saudi Arabian exports of crude oil. Saudi Arabia is now third, following or right after US is the number one exporter of crude, then Russia, then Saudi Arabia. And still, it's a very important number. 5% of the world's daily production has gone blacked out. That's a supply decrease or a shrinkage, which causes a massive rally in oil futures. So on that news, WTI, the US contract, opened up 15.5% higher to 63.34 yesterday after closing around 54.70. Massive rally on that news. The biggest intraday gain since June 22nd of 1998, which, by the way, Brent crude had an even higher rally, 19.5. So the crude oil contracts listed in the UK rallied almost 20% literally overnight. This is why I tell you, holding futures positions over the weekends become really risky in these global news events that just pop out of nowhere. All right. During the weekend, you don't have the ability to manage your position by moving your stop or taking profit. So you're kind of stuck. Your hands are tied and you're hoping for the best on the reopen. Massive losses are going to be incurred by hedge funds and institutions who are short oil. All right. That's the big event. I mean, the big question now becomes this: how long will supply be out? Saudi Arabia said that by the end of today, they're going to have 1/3 of the output resumed. So that's going to come back online. Donald Trump said that he's going to pull from the SPR, the Strategic Petroleum Reserve, from the United States to sell more oil if needed to cover this supply disruption. All right. Non-OPEC and OPEC members don't have enough excess capacity to output the shortage that's been created by this drone strike. Saudi Arabia believes that Iran is behind this, and Yemen's Houthi militant group has claimed responsibility for this. So this is a Yemen thing, but Saudi Arabia says the Yemeni Houthis are supplied and financed by Saudi, or not by Saudi Arabia, by Iran. All right, that's where this whole thing boils down to. Donald Trump this weekend tweeted, hang on, I got you my boy Mark here, some props. Mark, you got some cables to fix. Sorry. We did some work over the weekend. So this is the interesting part, all right? Who will be held responsible? And Donald Trump said that they're locked and loaded waiting to support their allies. Very, very interesting and aggressive comment. And this is what's causing oil prices to go up as equity markets, because of this new risk that just appeared, has sold off from near all-time highs. All right, this is what this explains all the overnight drastic movement that we're having a look at. Also, the Saudi Aramco IPO that was supposed to happen, the world's biggest initial public offering, is now probably delayed. Victorio and I said that yesterday. I remember in Market Analysis Live. This morning, we heard the squawk saying Saudi Aramco is considering delaying their IPO after half their production capacity got blown out. Obviously, how are you going to IPO with half the equipment damaged and everyone looking for answers? The real big takeaway from this event, though, that nobody's talking about is this. So somebody will say, well, only 5% of production has gone out. Why is the oil rallying 20%? It doesn't make sense. It does make sense, because what's more important than the event itself is that there's a likelihood or a possibility of another event like this occurring. All right. The fact that it happens once shows that it's easier to happen than people thought. And that's what's on the mind of oil traders this morning. All right. It's a significance that it did happen. And now people are thinking, hey, could it happen again? All right. This is one of the biggest outages in history. All right. In fact, the second biggest happened during the Iranian Revolution of 1978 to 1979, where 5.6 million barrels a day were shut out. Now we have 5.7. So we topped it just briefly. And then happened again in 73, 74, 1990 to 91. This isn't in order of the most recent, but rather in order of the biggest output disruptions, was 4.3 million barrels. All right, so this oil disruptions causing upside in the oil market, downside in equities. Let's see how far we get off the open. In addition, today, national strike is launching against General Motors, stock symbol GM. The United Auto Workers Union has begun a nationwide strike with some 46,000 employees walking off the job today after contract talks hit a roadblock. All right. Shutting down North American production for General Motors will cost them $400 million a day. Just think about that. $400 million a day. General Motors has enough inventory for about a week, 1 to 2 weeks maximum of disruption, and they won't be impacted. And I know that the United Auto Workers Association knows this. I know the union knows this. And so this strike, if it lasts longer than 2 weeks, then they're going to get General Motors a little bit more desperate to sit at the table and give them what they want. All right, so keep an eye out for that. This will have stock pressure to the downside on General Motors immediately, but more so importantly, if it continues for 2 weeks plus, it's really going to start to take away from General Motors' top line revenue. All right. In addition to this news report out of Asia now, China's seeing a slowdown to the growth. Industrial output weakened to 4.4% in August. That's the weakest in 17 and a half years. All right, so a big miss in Chinese economic data, responsible for the downside in Asian markets. All right, this is in result to trade war and softening domestic demand, which is also a response to the trade war situation out of China. Premier of China said it would be very difficult for the economy to continue to grow at 6% or more, and said that we face downward pressure, and they revised their GDP estimates lower. So China is being impacted, and it's showing in the numbers in terms of their output growth. All right, in today's markets, Asia, Japan is closed. Hong Kong is down 1 percentage point. China's flat despite the bad industrial output data. India's down 0.7%. In Europe, at midday, London's down 0.2. Paris is down 0.7. Frankfurt's down 0.6%. Right across the board in Asia and Europe. And in the United States, Dow and S&P down 0.4. NASDAQ leading the way, down 0.6%. Crude oil up a massive 8.2%, but now driving even higher to 60.49. You know, yesterday I almost had a short trade at, we're doing the Market Analysis Live webinar. I was looking at the 60.70, 60.70 short, and it got all the way down to the overnight low of 58.77. But that occurred at 3:30 in the morning, so I wouldn't have been up to take my profit. And I don't trail stops. I just let it run, move it to break even, see what we get. I'd still be in profit if I got in this morning, but I didn't do it. I didn't want to short a position and go to sleep. That's probably the worst sleep I was going to get anyways. So it was worth the sleep. I got a good 8.5 hour shut eye. I didn't short oil. Today we'll be trading in the room. Expect a lot of volatility. On this news and on equity weakness, gold made a run higher. but is now selling off to retest its overnight low at 1506. We opened at 1511. Overnight, we got as high as 1514. And yesterday, we made a high of around 1519.70. All right, so after some upside pressure, gold selling off, equities are headed lower. All right, but rebounded overnight, and we still haven't closed the gap. The gap on equities is at 3,008.5. We'll talk about that in a moment. After we get off YouTube, 8:30 we had Empire State Manufacturing Survey, and nothing really big on the docket for today. So my view today is sell early morning strength and look to buy late morning or early afternoon weakness. I do think we're going to track higher. And the big question here that everyone wants to know is institutional money going to add to their positions at these frothy levels on equities? The answer will be, if we get a move higher on high volume, the answer is yes, more than likely. We get the confirmation this Friday when the latest report comes out, but that's what everyone's wondering about. And we also need to know, what will the Fed do? Because a lot of institutional traders at this point, barring any new news events that come in and hit the tape, they're waiting for the Fed. So you may see reduced volatility and volume until Wednesday this week. So what I got for you guys, it's a morning market update and a week opening update as well, meaning that we covered a lot of the events for the rest of the week. Now you know what you're up against. Good luck, manage your risk, trade like a trade pro. We'll see you guys tomorrow morning, and we're back to the Trade Room daily after concluding our awesome Elite Bootcamp last week. I miss the people. It was a great event. They learned a ton. We'll see you guys tomorrow. Take care and have a great day. Goodbye. All right, Boxy, over to you to do oil, because you're the man of the hour that everyone wants to hear from at the moment. All right, what will oil do, Mr. Box? Let's send it over to you, and then I'll come back, take it over for equities once we get the morning oil up report. Over to you. It wasn't, hang on one second. I'm still on YouTube too. Somebody said, was it a drone strike? There's a lot of satellite imagery showing it was missiles. So whether it's a drone strike or missiles, there's a little bit of ambiguity there. And if it is missiles, then where did they come from and who got them? That's what we're keeping an eye out on. This story will unfold. It's just the beginning. Great question there, Will. It looks like you're paying attention. It's awesome. Take care, brother. We'll see you in the trading room. YouTube, have a good day. Boxy, over to you. Sorry, sir.